Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all the Wall Street hype. And as we always say, the charts tell the truth. Now, I can't wait to get into today's video, guys, because there was a ton of stuff going on. There was ABK news, which is AMBAC. There were talk of bailouts. There was gold and oil just skyrocketing and just craziness across the board. So we're going to get into it. Hopefully we can cover everything we need to cover today because it was a lot. I'm going to get right into it. One thing I did want to announce is that Paltalk, which is what we do our chat through, does allow Apple and Mac computers to be used now for the chat. So all you guys that have emailed us over the last 6 to 12 months asking if it's possible to use it with your Mac, it is now. I believe it's called Paltalk Express. All right, so those of you that want to do that can come join us. Now let's get right into this because there's a lot, as I mentioned, to go over. And you guys can see, overall the markets closed positively today. We had a nice little push right at the end of the day, but for the most part the markets were zigzagging all over the place with a positive bias, let's be honest. All day there was a positive bias. I think a lot of that had to do with the idea that AMBAC, ABK, was up for some sort of bailout plan, and that's what caused that rally yesterday in the markets. Now you remember, it was pretty ugly during the afternoon period yesterday, and all of a sudden we got that possibility of a bailout. We got the monster rally off February 7th pivot point. Now, the pivot point on February 7th was a buy opportunity, no doubt about it. I had mentioned that in the day before's video, that if we touch that Feb 7th, as long as we stay above it, it's a buying opportunity. Sure enough, the rally yesterday was tremendous. And in tune with that, it signals either a pause day today or another small move up, and that's exactly what we got. All right. Now, what you can see here is we started out the day with the ADP jobs number, okay? And the jobs number was not great. And you can see right here at 8:15 in the morning Eastern time, it came out, and you saw a little bit of a sell-off. But then right away, as you got to around 8:30 to 9 o'clock, you started to see a buy program come in very slow at first, but then topping on a monstrous move up right here. And then we started to trade in that sideways pattern. All right, and this could go either way. Now, when you see this pattern, you say, well, it could be a break up pattern if it holds this 20 moving average, or it could be a breakdown. And initially, it looked like a break up. Notice how this candle started to move right off the 20 moving average here and pop. But then all of a sudden you started to retrace, and before you know it, you had a topping candle. Notice how the candle was all the way up here and closed the 10-minute time period in the lower 25%. In general, that dictates that you're going to have a move down. You guys should be familiar with this by now from watching all the videos, and you see the push down right here all the way to that 50 moving average. Now let's look at a little trend line right here developing. Notice how the trend line is equal to the 50 moving average on the intraday, and it's holding, but you have one hit. In fact, you even have a hit all the way back here. So we can even draw that trend line all the way up like this, and we'll take away this trend line here. So you have it even one hit here, one hit here, one hit here. You know from the rules that eventually it's going to break, okay? So you have another push down off that topping tail, in which case you get one more bounce to that 20 moving average on the upside, and then everything collapses. Now the collapse here, midday or early afternoon as it was around 1 o'clock, 1:30 that it took place, was a result of ABK was halted right around here. All right, that's AMBAC. Now everyone anticipated this major bailout plan to be announced, and the fact of the matter is it was basically a restructuring plan. Nothing more, nothing less, restructuring, okay? So in doing that, they're basically going to be handling a few different odds and ends, and the market did not like that. And once they got that news, it started to sell off very, very hard, and you can see a 3-bar surge to the downside. Oftentimes, a 3-bar surge can yield a bounce, in which case we did get that bounce, and the market started to retrace back to the upside. Again, we hit that same resistance point, and look at, if you extend this line, essentially you're coming right up to this point right here, which equals the 50 moving average one more time, at which point you get a small bounce off. And once you go through the 50, notice how you hit the 50, you break through. The first hit of the 50 on the upside now should be resistance. Sure enough, you get a 3-bar sell-off right to the 200 intraday moving average, and followed by a nice push up, breaking out very nicely into the close with a strong buy program. Now, we'll have to see how this sets up for tomorrow. We've had a nice push from the lows from yesterday off February 7th. You may see some more upside. You may see a pause day with a small downside or a small upside, but unless we get some crazy news out there, the market is very strong at that February 7th low and should continue to hold that. If we do happen to break that, obviously we've been talking that you want to look for January lows by that point. Now let's go to the daily chart here. Now on the daily chart, you can see how powerful this February 7th low was, and I'm going to draw it in. And this is what we kept on pounding the table in these videos on, how much support this February 7th pivot point would have. If we had closed at the lows of yesterday, we could have broken down. but they saved this market, they rallied it tremendously, and that showed you how much support is at that February 7th low, and how they're not going to let this market break down that easily. Too much to risk. There's too many of these bailout plans being discussed. The market's just not ready to fall yet. We saw the put-call ratio today up near 1.5. Now, the put-call ratio is a great indicator. It tells you how many puts are out there to how many longs. In general, a number of 1.5 or better, meaning there's a ton more shorts in the market or puts, the market will rally, and vice versa. If it's a 0.5 level, 0.5 number, or less, that means way too many longs in the market, and the market may fall. Today was the first time in quite some time, ever since really down here, where you got a number that was near 1.5. We reached a high of 1.45, indicating to me that there was a good chance of an upside bias in the market intraday, and sure enough, we did get that pop. Now, we may have a little resistance right here at the 20 moving average on the upside on the SPY here. That would be what I would look for as the first target. Wouldn't shock me to see the markets move up to that point tomorrow and really touch that, or maybe even pierce it. Next, we have to establish ourselves above that 20 if we're going to move towards this 50 moving average. On the daily, that'll be the next spot, though. All right, after we get through this point here, which is the 20, then you look for the 50 as near-term support, resistance to the upside. All right, on the downside, continue to watch this level. Should that break, then you're watching for this. Should that February 7th low break, you easily see the January lows, in my opinion, as long as we get confirmation of that move down. All right, now let's look at the NASDAQ. NASDAQ, very interesting as well. You had that same move off the February lows, but the NASDAQ was even closer to breaking down, and I'll show you why. Notice the weaker chart on the NASDAQ, and I've mentioned this pretty much every day. It was much lower. In fact, it was actually approaching the January lows if you want to draw out a chart. It was not that far yesterday from those lows. I think it was about 20 points from the January low. And then all of a sudden that massive buy program and rally came in, and sure enough it pushed it up and just saved it in the nick of time. I can't stress how impressive that was in the markets. Now, by no means, and I say this every day as usual, are we saying that the market's going up to, going to start breaking up huge amounts or anything. Yes, we do foresee some sort of bounce here, which we're getting now off the February 7th low, but it's not going to be some tremendous rally. The markets aren't going to all of a sudden go positive for the year or anything like that. That would be absolutely shocking. In fact, we see a small bounce up here before the next shoe drops. And when that next shoe drops, watch out to the downside, because this market, in our opinion, will take out February lows and January lows and go even lower. So it's a big deal right now. There's still a lot of stuff to be uncovered. These write-downs, these credit issues, the housing slump is not even half over, in my opinion. All right, so it's a big deal. There's still a lot to come out, but you got to play as a trader. You got to play the near-term moves, the moves every few days. You want to capitalize on a move up. Because let's face it, if you went long right here, and where are you now? You're basically flat to maybe down slightly. But as a trader, you can short up here, buy here, short there, and so forth, each direction. So ultimately, if you connect all these lines in one straight line and you've hit it perfectly, now no one hits it perfectly, even we don't hit it perfectly by any stretch, then you have a line of this much upside that you've made by using these lines if you're hitting each side. Now, even if you just connect on a little bit here, a little bit here, you still end up doing better than the sideways to slightly down where you would be now if you had gone long right here. So again, as traders, that's what we try to do. Now let's look here at the ES chart again, and well, let's not focus in on that. Let's take a look at a little of the technology issues. Overall today, we saw some interesting things in all stocks, including technology. For one, let's focus in on Baidu. Baidu was down today. Now, Baidu's been a little stronger than Google, so I'm not surprised to see this divergence. Baidu has been trading in a sideways pattern like this. Notice the line. All right, ever since January, yeah, it's not doing very well at all, considering the market, for the most part, is traded sideways as well, though. It's not horrible. But Google's been the one that's been hammered. And Baidu was down about 4 points today, but Google was really the one that was strongest out there. Take a look at Google. Look at the chart in Google compared to Baidu. Google looks like this. Baidu looks like this. A major difference. So today Google was actually bucking the trend here of these larger cap technology plays, up 3 points, and that's not really surprising because look at how much it's been discounted. You're talking about Google being here at the beginning of the year up near 700, now trading at 447. So to see it up a couple dollars, not surprising. And to see Baidu actually weak, not surprising either. Now, Apple Computer was down about 13 cents. No major issues going on there. Basically a flat day on that. Research in Motion was weak today. That's RIMM. And you can see, but this stock has had a monstrous move up recently. In fact, just looking at this chart pattern, you have a possible W formation here to the upside with a V pattern. So it's a possible move up. We have to watch this. But remember that move. All right. And again, should it close below the 20 moving average right here, I would not like this play. but it looks okay here as a possible WV formation, and we'll have to keep a close eye on that. Again, as soon as it breaks to the downside, this necktie, which is a combination of the 20 moving average to the 50 right here, then you have to negate that, and that's basically if I were in this play, and I'm not in this play. Repeat, I'm not in this play. If I were in it, the stop would be right underneath here, and you're out. You take a very small loss on that play. In any case, I'm not in it. If I choose to enter it, I'll let everyone know, obviously, before I do. Okay? So that's about that, and that's all I'm going to cover today. We saw Goldman trading up into the close. We had that nice push into the close, and I'm just going to reiterate that here. And let's go to the intraday. Look at this nice little move into the close. So we are looking at a possible move to the flat side or a positive move coming in. There should be some consolidation soon, but we will have to watch the numbers very closely. All right, folks, have a wonderful day. Come join the chat room. Come join the Swing Trade Alerts. Come join the webinars. We're going to be posting an early April webinar date where we're going to teach all this stuff. Have a wonderful day. Take care.